Hi and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1113A, and today's date is October 28th, 2016, and the title of the episode is GDP Surges Days Before the Election. Coincidence? I think not. Let's get into the economic collapse financial news. Now, today the information about the GDP came out, and the corporate media is making a really big deal of the GDP hitting, 2.9%. And we need to think to ourselves, how can this possibly be? How can the economy all of a sudden go from 1%, 1.5%, and shoot up out of nowhere to 2.9%. I mean, do we really believe that manufacturing just took off? We've been following manufacturing. We know this can't be true. Do we really believe that we just started to export goods like crazy? Well, we've been following what the United States has been producing, and we know that this can't be true. Do you think the people just all of a sudden started to spend money and retail is doing incredibly well? Well, we've been following spending, we've been following retail, and we know this can't be true. So what actually happened here? Well, what they did was they manipulated the GDP numbers. Instead of manipulating unemployment, people weren't buying it, and people were looking at GDP. They said, you know something? We better improve the economy to make it look good during the election. And this is exactly what they did. And we can see right now, people are going to look at this number going to the election and they're going to say, wow, the economy, it is doing fantastic. Everything is improving. But really, is it? Let's take a look. We see out in London, for instance, where everyone believed that housing was continually moving up and up and up, and here in the United States we believe that housing prices are continually moving up and up and up, same in Canada and Australia, throughout Europe. But we are seeing that housing prices are not continually moving up. They are starting to fall right now. And we know that the central banks, they can only blow the bubbles up in certain areas. They can't hit every single area. It is completely impossible. And what we're seeing right now out in London is that housing prices are falling. Out of 130 pages of advertisements, with 15 ads per page, nearly half of all properties, or 53 of the pages, show a price reduction. Now, this is in London. Here in the United States, we've been seeing this for quite a while. If you go outside of the 20 cities that Case-Shiller looks at, we have been seeing the same exact thing, that people are reducing their prices. And we can see right now the housing market around the world, it's starting to decline. And it's declining rapidly. But here in the United States, we see that the U.S. government is trying to create this bigger illusion that the economy is doing better than it really is. And they've been trying to do this all throughout, the 8 years or so since the Great Recession. And we can see right now, not many people are buying this. And I think this is why they wanted to up the GDP numbers, to make that seem like the economy is really, really doing well. Because if you look at the UMich final October Consumer Sentiment Index, it has dropped to 87.2, the lowest since 2014. And we can see right now that when we look at Bloomberg, we look at the Gallup polls, we look at the Governor Board, we look at all of these different indicators about consumer confidence, we see they're all declining right now. When we look at business conditions moving forward, we see that is also declining. So what we're seeing is that people aren't really believing, and they knew this, and I believe at this point, since we're days away from the election, they needed something to make people believe that the economy is doing well. And I believe they're making their move with this GDP number. And we've been looking at all the economic indicators, and if we look at business investment, and we talked about durable goods before, we see that this plays a huge role in the economic growth. And it just booked its worst September since 2010. The Census Bureau reported today that orders for durable goods, products and equipment designed to last over 3 years, inched up about 2.4 billion in September, or about 1% from a year ago, on a 4.5 billion year-over-year surge of defense capital goods. Now, if you exclude defense, orders really fell, like we said yesterday, by 2.3%. Now, in the past, this was due to oil, gas industry cutbacks, but mostly now they've run their course. So year-over-year decline in September has hardly the fault of the oil and gas industry. And when we look at the graph going back to 1995, every time we've reached this point in new orders, non-defense capital goods, durable goods, we can see right now that things are rapidly deteriorating. And if we look at it right before 2001 crash, we hit about $68 billion. And then it declined rapidly after that. We were in a recession. In 2007, going into 2008, we hit about 69 billion or so, and then all of a sudden it rapidly declined. Here in 2015 or so, right before 2015, we hit around 69 billion once again. We are now down to 64 billion. And we can see right now that this is going to go further and further down, and we are in a recession. Now, you have to go all the way back to September of 2010 to find lower business investment. I mean, this tells you that they are just trying to keep this economy chugging along. And it's getting harder and harder because you can see we're in a downward trajectory. And every single time throughout history, we've seen the same thing occur. We head into a huge recession. And right now, from this data, it looks like we're already in the recession. Now, today, they came out with the GDP numbers. They're telling us that everything is fantastic. GDP jumped to 2.9%. And everyone's sitting there, and the corporate media is out there saying, you see, we have takeoff. Everything is fantastic. It looks incredible. So what caused it? Why did GDP all of a sudden jump from a model from the Atlanta Fed of about 1.2% or 0.9%? Why all of a sudden did we get 2.9%? Now, did it come from consumer spending? No, not really. That wasn't it. There was a inventory accumulation. We did see that. And we saw something in exports. So when we dig deeper into the numbers, they reveal something very fascinating. That this spike in exports, even with the stronger dollar, was the highest seen in over 2 years and amounted to 49 billion, or roughly 41% of the nominal 119 billion annualized increase in the third quarter of GDP. And it gets even more surprising because when we look, we find out it was soybeans. So soybeans was the cause of this surge. We exported soybeans. Now, when we look at this, the soybean exports meant that the seasonally adjusted food, feed, and beverage exports are up 121% in 3-month on 3-month annualized terms. The soybean boost is indeed a one-time thing. It has no implications for growth or trending growth or anything like that whatsoever. It looks like the U.S. government central bankers, they planned this, they were holding it back, and they used it to pump up GDP at the last minute, right before the election time. This was pre-planned, because if you strip all of this out, you strip out soybeans, you strip out Obamacare spending, the U.S. economy grew by 0.9%. If they let that number out during this period, it would be a complete disaster. So what they did is they manipulated this entire GDP. Now, what they're going to do going forward is you're going to see revisions like you've never seen before. And the GDP is just going to take a nosedive. And everyone's going to say, unexpectedly, we don't know how this happened. We thought we were at takeoff here. We thought the economy was going to boom. Because you have to remember, throughout this year, Obama couldn't get GDP over whatever it was, 2% or so. And people were pointing their fingers at it saying, look at this, GDP is declining. We're at 1.8, we're at 1.7, we're at 1.5. It's just getting worse. How is the economy improving if we don't see GDP up around 3%? And you have to remember, the people are just going to see the headlines. They're just going to see what is happening right now. They're going to see 2.9%, and they're going to think that this is the GDP for the entire year, that everything is improved. And this is exactly what they wanted. It's propaganda. Now, Moody's is out there warning Deutsche Bank that they're very close to falling below their default point. And what they said is that their default frequency remains at one of the highest levels in the banking industry, despite the bank's efforts to shore up capital positions. And they said any type of unexpected economic crisis or situation or anything like that, well, Deutsche Bank is going to have a major problem. They also said Deutsche Bank's risk has been steadily increasing since 2008. Well, we all knew this. We've been looking at this and we're saying that Deutsche Bank has always had a problem. And they're going to have a continuous problem because depositors, they are taking their money and leaving the bank. And this is going to be a problem. But we can see right now, the central banks, they're going to do whatever they possibly can to prop this up just to hold the system together a little while longer. Because we have to remember, the central banks, the U.S. government, the ECB, Bank of Japan, Bank of England, they're trying to hold the system together long enough to explain why the system is crashing. And the system is crashing. The system, from all the economic indicators that we've been looking at, it is completely falling apart and it is not improving whatsoever. They can give us manipulated numbers all they want. They did this back in 2008. Think about it. They kept the subprime securities at AAA for how long? Even when the mortgages were defaulting, they were completely garbage, and these AAAs were junk. They were garbage. They said, no, they're perfectly fine. They're AAA. Stock market's going up. Everything's fine. Real estate, it can never go down. Everything's contained. So they can do this up until the very last minute, and they'll continually do this even when we're in an economic disaster. But we can see right now that this collapse, it's just right around the corner. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.